Good morning. I'm Peter Towers, Managing Director of ESS BIZTOOLS. We're about ready to start our webinar today, Empower Tradies with an Effective Pricing System. Those of you who are joining us from social media channels, welcome. I hope that you enjoy this overview of services that accountants and bookkeepers can supply to tradie clients. If you have any questions on any matter that I discuss, please send me an email, peter@essbiztools.com.au. Unfortunately, you cannot direct link from social media. So it is now 11 a.m. AEST, so we're ready to commence this webinar today. Welcome. Empower tradies with an effective pricing system. I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. I hope that you're having a wonderful day. How do tradies set their charge-out rates? It's an interesting question. And I've done a fair bit of analysis on this. And over the years, I've acted for a lot of tradies, big businesses, small businesses. Some of them ended up being very successful businesses. But large numbers of tradies do not utilise a mathematical calculation process to determine their charge-out rates. Instead, they look at other items like guessing a good figure, adjusting last year's price by CPI, copying a competitor's pricing. Who said the competitor had it right? And relying on instinct rather than financial management. And it's costing tradies very heavily because tradies are a very important subgroup of the Australian small business industry groupings. And we're going to look a bit more in a moment about what's happening with SMEs in general, which tradies are part. Matching a competitor's rate can be dangerous. They have no idea of their competitors' productivity levels. They might be extraordinarily good, but your client's team just can't get to, or they may have made them very low, which will distort your client's information if they're just copying it. Their labour structure might be different. Their overheads could be different. Their targeted profit might be very low or very high. So their break-even position will be different. They could be undercharging and your client just goes ahead and copies. So I think the moral of the story is to say to your clients that they should be calculating their charge-out rates based on their business conditions, which gets back to the team members they've got, what their pay rates are, what their classifications are, what their productivity expectations are, and obviously the targeted profit that your client would like to make, the overhead expenses, and some other matters which we're going to discuss in this presentation. But we need to have a look at what's happening in Australian small businesses because the Ombudsman is telling us that they're suffering. And we know that. We just read that in the newspapers or switch on the TV of a morning and listen to the problems. According to the Ombudsman, 43% of small businesses are making no profit. 75% of the owners earn less than the average Australian wage. The Ombudsman has called the current situation the worst financial performance ever for Australian small businesses. That's not a good report card, is it? There's a lot of things going wrong. And tradies are probably the biggest grouping within Australian small businesses because there's thousands of them. Trades businesses sit squarely inside these alarming statistics. Basically what I just said, but it's repeating and emphasising that point. So what's happening in the SME overall space, I believe, is a reflection on tradies. So the overall results for Australian small businesses indicate that the majority of the trades industry, SMEs, are probably not using a mathematical calculation process to determine their charge-out rates. They're using all sorts of hand-me-downs, things they hear in pubs and clubs and others. So the trades charge-out rate package that we have developed at ESS BIZTOOLS is based on key factors which affect the business, including obviously the labour classifications, how many foremen, leading hands, skilled tradesmen, not so skilled tradesmen, rouseabouts, apprentices, does your client have? Because they're all different, their productivity is going to be different, and their expectation of their pay packet's different, and therefore we would be saying that their charge-out rate needs to be different. So that's why we're saying it's got to be done per classification, not as a single firm-wide rate. And in some cases, productivity may need to be calculated for individual team members. You may have an outstanding person working for you who wants to be paid a significantly higher salary. So that person may well be in a separate category. So let's start with labour on costs, because I found over the years when I sit down and talk to clients who are running trades businesses and I ask them how they've calculated their charge-out rates, I might hear about holiday pay. For a long time, I didn't hear about superannuation. Why? Because it's not getting paid out. Well, it is. There's money going in every year, and from now on, it's going to be every payday, or from the end of June next year, every payday. So it's definitely a cost. There are some things like long service leave that are not actually getting paid, but they're accumulating, and your client should be aware of that. I think you should be building an accrual and perhaps having the money go into a separate bank account so that the funds are available to pay what can be a very big expense for a lot of SMEs. But we also cover things like the holiday pay leave loading, if you're paying it, public holidays, of course, personal and carers leave, workers' compensation, training, professional development. All these matters come into it because your client's allowing time off for these items. So the actual number of days that the team member is going to be actually able to work to earn income can be significantly reduced. So that's part of the process also of why we've got to analyse labour on costs and build them into the budget. And then we come to the labour budget. Now, we've got this on a computerised spreadsheet, and basically the main area is the labour on cost, because a lot of things come out of the labour on cost calculation. It's then fed into the labour budget. And actually, you only have to contribute a couple of bits of information to the labour budget: the number of people you've got in each category, the salary that you're paying, and if you've got different salaries for people that are very similar categories, it's a good idea to split them up. So you've got category 1, category 2, category 3 of leading hands or whatever. So what's been transferred in is the labour on costs. You're going to directly input the wages, and the key figure is the productivity percentage expectation. What percentage of the time that you're paying someone to work for you do you believe that is going to be able to be charged to a client, and the client will pay for that time? So it's always going to be a figure less than 100%, and it needs to be accurately determined, if possible, from prior records, so that you're getting a proper feel for what it is, because there's always other things that happen. Team meetings in the meat industry where I worked for many years as a chief financial officer, it was knife sharpening and cleaning down and things like that. There was no effective work going on then. So that applies to all other industries also, doesn't it? So from this, you can produce a full labour cost, which then is the foundation for the accurate pricing. Now, that labour cost obviously includes the labour overheads that have come from the first calculation and have been factored in. So you've got your total labour cost covered. If you put on more people, of course, you need to be updating this calculation. Then we ask for the targeted net profit before tax. Why? Because it's very important that the outcome of all this is going to be that enough revenue is raised to pay for the wages, the on-costs, and the overhead expenses and achieve the targeted profit. Now, the targeted profit might be called the return on investment. And in our calculator, we've got provision for that. You can click on the return on investment and you can feed that in. System will say, well, what do you think the business is worth? You might say $200,000. What's the return on investment? Say 20%. So you're looking for a return of $40,000. That will be, in effect, the profit that the system is looking to achieve. So this is very important because we should be taking luck out of the calculations of charge out rates. They should be based on mathematical formulas built in to create some certainty for your client. Because what you can then be saying to your client, well, we've gone through and looked at your 10 team members and we've allocated the classifications you told us they were in. You've given us their productivity percentages, the number of hours they work. You've told us what their holidays are going to be and what their training and professional development leave will be, or away from the workplace. And we're then calculating what the charge out rates need to be to cover your overheads, to cover the salary and labour on cost figures, and the end result should be the targeted profit. Now, it won't always work out like that, of course. People get sick. There's changes. There might be some reason why productivity can't be as good as what was expected. And this needs to be monitored and adjusted during the period. We'll come back to more of that in a minute. So the overhead allocations, the next one. Overheads will be different for every type of trade business. The budget estimates can be based on last year's actual figures with a CPI adjustment, or perhaps you've got some known costs because your suppliers have already come in and given you next year's prices, and you've got to look at that and decide whether you're going to continue to deal with them or you're going to go somewhere else. But you then know, and those quotations might be higher than last year's figures plus the CPI. So you would then be slotting in the costs that the people you're going to be dealing with are going to charge you, so that you get as close as possible to a total overhead cost figure. So the overhead costs, just going back to overhead costs, might end up being $500,000. That's what you're going to be putting into the calculations. That expense has got to be paid for. And obviously, it's one of the costs of operating, just the same as what wages and wages on costs are. Another very important activity that happens in most tradie businesses is they buy materials for their client. It might be floor coverings, it might be paint, it might be various special timber, it could be carpets, a whole range of issues. It might be light fittings that the clients ask you to go and pick, probably up to a monetary value, and you send some, if you're the contractor sends someone out to buy these things. It's normally booked up to your client's account at those suppliers. So your client's got to pay that bill, whether their customers paid them or not. So they've got their team member going out and buying and bringing these extra purchases in. There's the process of paying the accounts and maybe waiting a little while to get paid in return. So what markup do you suggest that your clients apply for this extra service that they're providing to the customers? 10%, 20%? So what we're going to have is that there's an expectation of earning a super profit from handling material purchases on behalf of clients. What happens then to that super profit? What's it going to be used for? Now, you might say to your client, well, what do you want to do with the super profit? You're going to go out and buy $1 million worth of product during the year. You're going to mark it up, you're telling me, by 10%. So that's $100,000. What do you want us to do with $100,000? Do you want to keep that as a separate super profit that you want to know that you're going to get on top of the rate of return type figure that we've already put into the calculations? And or do you want it to be used to subsidize the labor cost? Now, the client might say 100% subsidy on the labor cost because we're going to blow ourselves out of the market otherwise. Or he might say, we'll split it 50-50. We'll keep 50% of it, so 50 grand. We want to have that as something just a little bit up our sleeve. But the other 50% you can utilize to reduce the costs that have been allocated for the determination of the various charge-out rates. So the system then goes through and does a proof sheet in these mathematical calculations for each employment classification, and the calculations then done to determine the hourly charge-out rate. And we're then going to show the chargeable hours for each team member category. And this will produce the targeted annual income for this tradie business and will help contribute to the expected profit for the year, because obviously the expenses are going to have to be deducted. So this gives your client a mathematical calculation. And it's based on the productivity mix of different classifications of team members, variable chargeable hours for those classifications, and the overall targeted profit. It's all put into the mix, and it's all done pretty quickly. And you can then sit down with your client and say, well, this is the result. So we've determined charge-out rates, but then we need to look at, well, how do we control this? We've set it up on day one. This is how it's going to work. But we need some additional information, monthly financial accounts, which analyze the key performance indicators and business metrics and the comparison of the budget. We need to know that every month the cash flow forecast has been examined in some detail for the next 12 months. These processes need to be repeated month after month. We just don't do it one month. We do it every month of the year to give SMEs a chance of success. This is how their bigger competitors operate. They're continually analysing what happened this week, this month. And if there's problems, they can make adjustments. And if they find that they'd set a productivity estimate of 80%, and for various reasons, the best that can be achieved is 70%, well, they need to go back to the computer, or you need to go back to your computer and recompute the figures. So we have some adjusted charge-out rates that can start partway through the year. So that's the scene we're setting of how calculations are made. But it's what comes next that's important and contributes to business success. It definitely does. So what is that? There needs to be an ongoing monitoring of the chargeable hours. So for category number 1, we've set a chargeable hours figure for the week of 30 chargeable hours. We need to ascertain if that's what you got. Did you get 32 hours? That's great if you did. But the bigger problem, of course, you've only got 27, because that's going to upset all of the calculations. So this analysis quickly highlights variations that are occurring. So you can sit down and discuss this with your client and say, well, here's the calculations, here's the figures, and this is how we've set it. But obviously, if there's fluctuations in these charge-out rates for any of these categories of team members, it's going to have a significant effect, because you're not going to be charging it enough for them. Strange how productivity figures always seem to come in lower than what was expected, not higher. So that's why I said the way I did. So a permanent variation for the charge out calculations, I think, requires the calculations to be redone and set up a new figure so that at least your client's got a realistic charge out rate for the remainder of the year. If they've already quoted, well, that's too bad. They've got to wear that they may have reduced their potential income by, say, $5 an hour going into their figures. So the weekly performance and profitability report that we advocate should be prepared is a snapshot of what happened in the business this week. What was the productivity of each team member? Do the calculations. This is what the return should have been, but this is what it actually was. The person may have said they had a problem with their physical fitness, and this has meant that they cannot produce as much work. But it's a good idea to check whether there's someone in their community who are able to do that job more effectively, so we can change the charge out rate. So these variations require the charge out calculator to be updated and new charge out rates determined, which you can then use from that time on as the rate that team members are being charged at, to try to pick up some of the losses. Now, what happens in most businesses, a charge out rate set for the year, they don't know how they've gone during the week, they don't get monthly financial accounts, so they go for the whole year. And then they find that, gee, we thought everyone would get 80% productivity, they only got 66. That's a significant impact on the bottom line of any business, whether they've only got one employee or they got 10. They need to understand what makes all these things click and try to ensure that they will meet their profitability target at the end of the year. So the monthly financial accounts give an ideal feedback on actual performance, enable the checking of the data used in the weekly performance report. This is very important. The weekly performance reports are just not there as standalone activities that's done without any linking back to any other information. They should be linked back so that at the end of the month, which is after, of course, these 4 or 5 reports will have been prepared, a reconciliation should be performed. What was the profitability or loss shown in the monthly financial accounts? What was the aggregate of the results of the 4 or 5 weeks? Are they close? Do they reconcile? Or are they miles apart? And if they're miles apart, that's presenting a problem, because it basically means that incorrect data is being used in the preparation of what's happening week by week. And that can have some severe consequences. So making sure the aggregate of the weeklies is reconciled with the monthlies, and if there are variations, changing the process in the following month to make sure that the system is enacted, which will ensure accurate information is prepared. I think this is a practical solution to assist tradie clients. I've been using this for over 25 years with my clients, and some of our ESS BIZTOOLS clients are using it very widely. One of our clients told me that when he joined ESS BIZTOOLS, he had 5 or 6 tradie clients, but he'd heard we had the trades charge out rate calculator, so he was keen to have a look at it. And after he saw it in a demonstration session, he subscribed. He's still with us many years later. But he used the calculator to charge the charge out rates, then suggested that there should be a commitment to monthly financial accounts and later on to the weekly performance reports as well, and that there would be regular meetings, normally monthly, sometimes quarterly, but normally monthly, to consider all of the information, not just print it up on an email and send to the client, because a lot of these clients won't read it. They haven't got time. They haven't to really sit there, but they want you to explain it to them, which is what would happen in a larger business. I was in a larger business, a listed public company. And whilst I wrote reports that went to some of the external directors, I found that most of them the leadership team were quite happy to sit there with me having a whiteboard and explain it to them, talk them through it, because they understood that. It's how they do business. So what we need to be trying to help our clients overcome is these very dismal figures that the Ombudsman is referring to about the general state of health of the small business community in Australia. The state of health is not very good. There are problems in Australian small businesses, and a very large group of that small business family is tradies. So therefore, I'm really urging you to have a good close look at your tradies and try and convince them that you will use the mathematical calculator that ESS BIZTOOLS has produced to produce a schedule of charge out rates that suits their business. It's coordinated to suit their team, their working hours, their productivities that they believe they're getting, so that they're in control of their own destiny. And then each month there's a meeting with them where you sit down and go through the monthlies. You look at the productivity figures. You discuss the issues and you make your suggestions. Now, a word of warning on making suggestions. In this area, you have to put on the hat that you are the internal accountant for your client. And if you're working in a larger organization, public company, and you were reporting to the CEO, you're there to be making input, making suggestions. At the end of the day, it might be the CEO's responsibility that he or she is going to make the final decision. But you need to make sure they understand, not just give them a sheet of paper and say, here it is, and rely on them reading it and sitting there and understanding it. Of course, give them the paper so they can take it home and think more about it. And you might get it back the next day or a couple of days later with a lot of notes and questions all over it. But in the first instance, I think we need to clearly explain. Use a whiteboard, use the computer screen, but get them to have a better appreciation. So the indicative fees of which your firm could earn from these services will be determined. So processing what the earning is very important, which ultimately will get to return on investment. So I'm giving you some figures that I know our subscribers are achieving. So I talk to them. So the setting up of the calculation, the talking to your client, the explaining it to him, the toing and froing that normally happens in those sorts of discussions, giving them the final printout, giving a note to the internal bookkeeper. These are the charge out rates to be implemented, these which team classifications. I think it's probably 5 hours work, and I've averaged it when I look at your teams. Partner rates might be 300, 350 an hour, but you've probably got some other accounting personnel that you're charging out at $180, $200. So I've averaged it at $250. If yours is higher, redo your figures, please. But I'm saying for setting up the charge out rate will be an income of at least $1,250 from your client. And if you're going to implement the full service, which is what I'm really recommending, this is what we're going to do with all of our clients, whether they're retailers, wholesalers, or whatever, sporting coaches or whatever. We've got to be offering as accountants to do the full package, not just little bits of it. And this is where tax returns have led people in the wrong path. SMEs need assistance 52 weeks of the year. In fact, you could near say well over 300 days a year. As that they know that they can pick up the phone, they can send a message to their accountant, and there'll be a response, like they would get if they were employing you full time. So the weekly performance and profitability report process, which then leads into the monthly financial accounts. You can use Zoom and other communications technologies to have your meetings with your clients. You don't have to be out at their premises all the time. And I don't envisage that you're actually going to be physically, or any of your team will be physically on site for the weekly performance reports, but you should be getting a copy of them. You need to train someone in the client's team to put those figures together. Perhaps you might have one of your team members partly involved in the process, but use the communications, use the software so that they can get results. And the preparation of the monthly financial accounts with comparison to the budget, that's important, because part of this process is you would have set some budgets up and you are going to meet with the client every month, analyse the performance, analyse the variations. And at some stages, you may say, we're going to have to redo the calculations. We're going to put them through again because things have changed. You might have changed the mix of the team. You've employed some new classifications. You need to put them into it. Or you found that the productivity figures were too high that we originally set. So that means you're potentially not charging out the right rates. Now, for this complete package, I've got accounting firms who are charging around $10,000 per annum for this work, meeting with the clients each month. So your total fee for the year is $11,250. Now, you could use the tax fitness benchmarking reports, which covers at this stage over 80 industries. By the end of next year, it will be nearly 400 industries, where they're analysing and giving results back for the top 20% performers. That's what they're ascertaining, not averages, but the top 20%. Very important that you don't give your clients a target based on averages, but of the good performers. That's what your clients want to replicate if they can, duplicate the top performers. So you can add benchmarking reviews and reports into there as well. And if you wish to subscribe to Tax Fitness, you can do so. They're an affiliate of ours, so we've got a special arrangement where if you subscribe through us, you'll get a $200 discount on the Tax Fitness subscription, which besides benchmarking, gives you a whole range of taxation material. But I like their benchmarking package. So that's the return. So your return on investment will be very attractive because the ESS BIZTOOLS charge out rate calculator is discounted at present. We've got a Black Friday. Yeah, Black Friday is continuing until Friday, the 5th of December. So our starter package, which has this package in it, is only $372. You'll make that on your first day. Advanced package, which includes a whole range of information, $797 is our discounted price. And the financial forecasting package, which includes everything that's in the starter and advanced, plus a whole range of other virtual chief financial officer service packages, for only $1,050. And all these figures include GST. Your rate of return will be very attractive. Please calculate it. And our other benefit is we give you 60 days free, 60 days money back guarantee. You can claim it after 60 days, but we want you to use the system so you can see how it can work. And you can have 14-day trial to see how you go with using the product. So we are trying to assist you to be able to assist your clients. That's why we got a 75% discount. Our original intention was a 50% discount for Black Friday. But then when we talked about it, we looked at what the Ombudsman had to say about the state of small business in Australia, which is not very pretty reading when you read it. So we decided we would add another 25% to this discount, primarily to encourage you as accountants or bookkeepers to plunge in and offer these services. We'll help you along the way. That's what we're here for, so that you can help your clients improve their businesses. We want your clients to thrive and scale up if they wish. So this will ensure that your clients will thrive and scale up. I've got it in front of my notes. In their businesses, if they wish. They don't all want to scale up. I know that. But some do. And you can help them. Check your return on investment on these subscription prices. We invite you to visit our website, www.essbiztools.com.au. Click on packages and pricing, and then click on any of the product packages. So the starter package, the advanced package, or the financial forecasting package, just click on there and the system will show you what's included in those packages. You get all that. You get notes. You get a monthly newsletter called Business Plus, which I'm about to write the December issue as soon as we finish this webinar. And we look at issues affecting SMEs. So in this edition, we're going to be looking at crowdsourced funding. I've got the notes there. I just looked over and saw what I was writing. And we've got some other very interesting notes. So we try to write 4 to 6 articles in each edition of Business Plus, and we try to spread it over about 6 different categories of SMEs, those who are thinking about buying a business, those who recently bought a business, those who have been in business for about a year, those who are wanting to think about succession planning, those who are looking to expand and are interested in, well, where do I get the funds to enable me to expand from? Well, there's great ways these days. They weren't always there, but we've got early stage innovation company where the investors get a payment, a tax reduction, and no capital gains tax on that investment if they invest in an early stage innovation company. And guess who pays that? The Australian Taxation Office on behalf of the government. And we've got crowdsourced funding, equity raising. Do you know nearly $400 million has been raised by crowdsourced funding companies? About 70 a year are going through. I think it could be a lot higher. 73% of the investors are small business people, what are called retail investors. So there's a lot of interest in people looking to invest in other activities. You need to make your clients aware of this. And there's no reason to say you don't know how to do it. We've got it in our manuals, which we've originally developed, some of them a few years ago, which we continually update, bring them into line with current developments. And you can click on the product packages and have a look at what's in the system. We look forward to hearing from you. But remember, the Black Friday for these special prices finishes on Friday, only a couple of days' time. I would love to hear from you. I would love to be able to talk to you about the benefits that supplying these types of services can make to the lives of your clients, because they'll have a plan for where their business is going, but also to your professional firms. Because all I hear from any accountant that I talk to around Australia is complaints about not being able to attract talent or retain talent. This type of work will help you attract and retain talent. So I look forward to hearing from you. Please go to www.essbiztools.com.au and click on packages and pricing, and then you can make your investment decision. But please do it before Friday night to attract those unbelievable subscription rates, which will give you a fantastic return on investment. If you've got any other questions you'd like me to answer, please send me an email, peter@essbiztools.com.au. Stay safe. Have a great day. Goodbye. And I really do look forward to hearing from you. And if I'm not going to talk to you again this year, Merry Christmas and best wishes for 2026. Goodbye.